we've moved away from like having any opinion on these things. I mean, I can have my own personal opinions, and I feel like they're pretty clear what they are when it comes to front running and sandwiching, but ultimately this is not our decision. Well, if they signed the first one but not the second one, that's probably an attempted front run. If they signed the first one and not the second one and then the third one, that's definitely a sandwich. Toxic forms of MEV are going to go away. We might do it, or someone else might do it, but I think eventually they will be pushed out of the ecosystem. We want to be here for many years. And so we try to take a very, very long-term view in terms of how we think things will evolve, how our products can be helpful, and how we make like Cosmos the most welcoming and also the most user-friendly experience possible.
Welcome to the Bare Metal Podcast.
So hello validators and stakers, this is Martin Vejmelka from Rockaway X Labs here on the Bare Metal Podcast, where we want to talk about technical and all other topics related to validation, especially in Cosmos. I'm here with Maghnus Mareneck from Skip Money. Welcome, Maghnus.
Hey, thanks for having me.
So first off, Skip Money raised a big round. Kudos to you guys. How did you get into MEV and what brought you to Cosmos?
Yeah. So my background, I got into crypto in 2016. I was a co-founder of like a very early NFT marketplace right out of high school, actually. It was called Cent. They sold tweets as NFTs. They sold a Jack Dorsey tweet for a lot of money at one point. And after that, sort of got very interested in just computer science and finance as sort of a combination. Went to work at a hedge fund for a little bit, hedge fund. And then also afterwards, like worked on products like Confluence and Jira at Atlassian. And I met my co-founder Barry during college, and we were always sort of interested at the intersection of like financial systems and engineering products. And so MEV like firmly fit into that category. We started Skip looking at the different MEV products that were already offered. And we thought there was sort of a gap between like what was already being offered out there. So Flashbots we saw as sort of like this purely extraction focused product. And then when we entered into Cosmos, we saw a need for something that was more customizable, or I guess the word we use for it is more sovereign, where app chains and validators can sort of decide what MEV markets they want to use and how they want to configure them. So that was the birth at Skip. It started at a Terra hacker house. Terra collapsed halfway through that hacker house. But afterwards, we expanded outwards.
Right. So that's pretty interesting. So you mentioned something that's interesting. You're not considering sort of MEV like a homogeneous blob. You're saying there are like multiple MEV markets. Can you sort of expand on that a little bit? Yeah.
So I mean, like I think MEV is a pretty encompassing word. It involves, it basically is a word that categorizes everything that happens between when a user submits a transaction to when it ends up on chain, and like what happens to it in the process. Does it get censored? Does it get reordered? Does it get put somewhere else? Does it get delayed? And a lot of the things that can happen are probably bad, right? And are probably like a toxic user experience. Whereas a lot of things are not necessarily bad, right? So if you submit a transaction that causes an arbitrage opportunity that will sort of like, create profit for someone else, you should probably be rewarded for that, right? Or vice versa, like the network should at least be rewarded for that. And there should be some kind of like competition around capturing that opportunity. And so this leads us to this idea of like, what really is MEV? It's like really block space markets, because what do blockchains sell? They sell their block space, right? Space on their blocks. And so our idea was, if we created good MEV tooling, we could sort of help accelerate this financial sustainability by having blockchains sell their block space in open markets that continue to accrue value back to the native chain.
Right. So yeah, I mean, makes sense to me. The whole idea of MEV as a way to maximize the sale price of that block space and somehow distribute it to help the sustainability of the entire space makes sense. When you talk about different kinds of MEV, are you? And I think you touched on another point. Just want to confirm. you're saying validators will be able to pick themselves on their node what kinds of MEV they want to allow, or is this going to be per chain? That's I think pretty interesting. So a sovereignty question, right? If I as a validator join, like, am I able to set my own rules?
Yeah. So, I mean, when you think about sovereignty in Cosmos, there's two parties at the table, right? There's individual validators and their decisions, and there's a lot that validators can choose, what infrastructure they run, what their commission is, etc. And then there's a lot that governance sort of decides collectively, right? And so you have sort of two sets of preferences. The way that we see it is, for things where it really makes sense to have, chain-wide agreement, governance is a great tool. So like a minimum commission, for example, right? To make sure that validators don't do this thing where they go down to 0 and then shoot up the ranks and then sort of like rug everyone for a 21-day period when they increase it to 20 or 50%, as was happening on some chains a while ago. So I think MEV falls in this category, right? Like it's no different than anything else. Like MEV is a redistribution of funds, just like transaction fees are, just like any kind of tax would be. So if a chain thinks it's really strong and the community thinks it's really strong to have some kind of bounds around that MEV, those should probably be expressed. And then individually, once validators sort of like validators can operate within those bounds to express their own preferences. So, for example, an example of this is there's like a Commonwealth thread from Dimi and Kevin up on Commonwealth for Juno to sort of place, I think it's like 25% minimum to the validator, 25% minimum to stakers. And then validators can sort of choose within that when it comes to MEV redistribution.
Right. So you are planning to sort of offer a 2-level governance structure, or let's say there's sort of like a setting the bounds at the blockchain level, but then choosing your individual within that playground, you can still express your individual preference. So that's pretty cool. If the code supports all that, I think that's a pretty cool take.
Yeah.
So I
was just going to say, like, right now when we see those preferences, we encode them. That's no problem. And it also applies, by the way, to like front running and sandwiching. Like we've moved away from like having any opinion on these things. I mean, I can have my own personal opinions, and I feel like they're pretty clear what they are when it comes to front running and sandwiching. But ultimately, this is not our decision to make. So Skip is neutral tooling that allows like full expressivity of the sovereignty of individual chains and validators.
Right. Makes sense. So let's say I'm a validator and I'm interested in using Skip money. So but my first question would be, how do I get started? What's involved in even like beginning, to get signed on to use Skip money?
Yeah, totally. Well, the good news is the process is pretty simple. The first thing we need to do is just identify that you really are a validator and not someone just looking to, watch the MEV bundle flow. So we have a setup process on the site. So if you go to skip.money/registration, you can sign a challenge with your operator address. So it's the same thing you use to sign governance votes. And if you don't want to do that, you can also delegate message vote authorization via auth-z to a different address, and then pull it back if you want to right after, just to sign that challenge. And that gives you an API key. And that's important for the next step, which is getting your node set up to receive bundles from Skip. So that process, it takes about 5 minutes. It involves using a patched version of Tendermint called MEV Tendermint, which is open source. I encourage you to take a look at it. It's pretty minimal in terms of its changes, and it doesn't modify any of the core stuff in Tendermint like signing. And just a couple config variables, including your API key. And when you do that, what happens when your node starts up is it pings the Skip relayer and says, hey, I have this API key. I'm associated with a real validator. When I'm up next in the block, you should send me bundles so that I can put them into my block, right? And so let's say, 5 blocks go by and it's your turn next. You ping Skip. Skip knows that you're up next. It sends you a bunch of bundles. Those bundles include payments to your validator. And then those bundles get included at the top of the block. And the rest of the block gets filled up by your normal mempool. So we're not like a censorship vector. We don't build the whole block. We only build a couple transactions at the very top, which is where most of the MEV is anyway. And you sign the block as normal.
Right. So going back sort of a little bit more details to these steps. So the first thing you said, I need to use a different version of Tendermint. So that seems to imply that I have to build the source code. So I'll just download the code that pertains to my chain, and then I just replace the Tendermint dependency with like yours, and then it's all going to build.
That's exactly right. Yeah, you just add an extra line in your like go.mod, which is like a replace statement. So you replace Tendermint with MEV Tendermint, and then you recompile that binary and restart. Throw it into Cosmovisor, however you like to do it. Yeah.
And you guys maintain both like 0.34, 0.35 version branches.
Right. We maintain 34.19 all the way through 34.24. Those are the versions. So we basically have a version of MEV Tendermint ready as soon as upstream makes a new minor release. And then once there's like a 35 or a 37, we'll be ready for that too.
Are you guys are there significant changes between these like patch versions? How do you look at this from a risk perspective? Are these like just tiny things, or do you guys have to introduce like bigger changes patch to patch?
So the only changes to MEV Tendermint are around the P2P module. So like the only real difference between regular Tendermint and MEV Tendermint is this concept of a separate mempool, right? So you have your regular mempool, and that operates and is untouched as normal. And then you have what you call the sidecar mempool. Mm-hmm. So that's a specific thing in MEV Tendermint that is used for gossiping MEV transactions. And the reason we have that separate mempool is to keep it private, right? So that gossip doesn't work the same way as regular mempool gossip, where it spams sort of all the nodes that you're connected to as peers, and then it receives it from everywhere. The sidecar is very selective. It only receives from the relayer that you specify in your config, which is probably skip in this case, but could be replaced with another one. And then it only sends it to nodes in your own little network. So for example, if you have a Horcrux cluster, it would only send it to the other nodes in your Horcrux cluster. If you had sentries, it would only send it to your validator. So it has a concept of privacy. And then the second thing it has is a concept of bundling. So we send over these MEV transactions, but those MEV transactions should really be put into bundles. So like we might send 3 transactions, but together they constitute a bundle that need to be executed next to each other. So the sidecar knows how to receive individual transactions that are marked as MEV and then put them into their designated bundles so that when it comes time to create the block, you reap those transactions in the right order.
Right. So as a side note, there seem to be quite a few refactoring changes because in the P2P module between 0.34 and 0.35. So how do you guys find like moving your stuff over? Because it moved a lot of stuff to internal packages, right?
Yeah. So the new concept in 35. Wait, which one was it? Oh, 35. Right. So we haven't. I don't think there's been a major chain that has started using 35 yet. I believe most are still on 34, but there was a big change on 34.23 where they moved like the P2P gossip packages to these things called envelopes, which were meant to be more reliable. And so what we did there was we, of course, supported that new P2P mechanism, but then we also backported it so you can actually receive both kinds of packets. Which is why I think you see 23 as like an optional upgrade like it is on Juno, where you can use 21 or 23 and they're interoperable.
Right. Yeah. We're operating some versions of Tendermint ourselves, so we see a similar sort of compatibility. So yeah, it's fun to talk hacking the P2P layer. So it, like from what you're saying, it doesn't sound like I need to take extra special care of hardware, and like there don't seem to be like major requirements for running Skipma. Is that fair summary?
Yeah, I think we saw one validator reported there was an extra 20 milliseconds of time at some point. I believe it was in like the REAP process, which was probably just from having additional transactions. Right now, with volume so low, running skip usually like increases the number of transactions you have in your block by an average of 3, which is generally good, right? Because one of those transactions is usually a payment to the validator, which is sometimes substantial, right? So like recently there was a bundle on Juno that paid the validator that mined at 28 Juno just in one transaction.
Oh, okay.
So that there's no additional latency though. Like we really try to build MEV Tendermint to be the least scary thing possible. So we didn't modify signing, we didn't modify consensus, We didn't modify anything really except for the fact that you have like a new peering connection and you receive transactions in the same way over P2P from that peer. And they're just treated a little bit differently once they get into the mempool.
Right. Understood. Makes sense. So going back to this build step, I replace the Tendermint version with MEV Tendermint, and I build my node, and then I run it. Is there something special I need to do with monitoring or extra diagnostics that I need to be looking at to understand if Skip's working or not, if it's operational?
Yeah, it's a great question. So we built a new set of Prometheus metrics that are just added to the regular set. So MEV Tendermint exposes, I think, 6 or 7 new Prometheus metrics. One of them is just, am I connected to the relayer, right? Am I connected to Skip?
Right.
The reliability on that has been really good. The only time we've seen disconnections is when we've modified our infrastructure because Tendermint caches IPs, so sometimes that cache persists. But otherwise, that's been a pretty stable connection. And then there's also metrics around how many bundles I've received, how big my sidecar mempool is, and then in the next week or so, we're going to be publishing the profit metrics. So we've been monitoring for a while to see sort of how this thing has performed. It's been live on Juno, I think, for 2 months now. It's been live on Evmos for a couple of weeks and live on Terra 2 for a couple of days. There's now over 100 validators running the software.
Cool.
For the past couple of weeks with no failures or app hashes or anything like that. So we feel pretty confident in its stability. But I think what people are really looking at now is, okay, like I really want to see how much money this has made me and then also other validators. So we're pretty excited to share those numbers soon.
Yeah.
I can also give you some high metrics if you'd like them as a sneak peek on this call.
Yeah, that's pretty cool. So going back to the monitoring thing, have you guys taken it a step further? Would you supply me a pre-built Grafana dashboard that just nicely lays this all out so I don't have to do any work?
We can't supply you that, but Polkachu can. Polkachu put together a
nice already
for his dashboard, and so we're able to share that with anyone. But what we found is validators usually, they have their own Grafana dashboards for Tendermint Prometheus metrics, and we just put them side by side the other ones, so they can just add those two. Right? They're either counters or gauges, so they're pretty simple to monitor.
I was just role playing the laziest validator that just doesn't want to do any. But yeah, of course, makes sense. Like, most of the guys will have their own monitoring where they can add it. So 100 validators using this on a regular basis. This seems pretty much an accomplishment. You mentioned 3 networks, right? There was Juno, there was Evmos.
Right.
Yeah, that's so you guys seem to be growing pretty fast. So you already touched on this idea of let's say profitable metrics and dashboards that you guys will be putting together to understand, so people can understand the state of the ecosystem. And that sort of stepping back more broadly, what happens when I'm just using Skip money, right? So let's say I got started and I've got Skip code in my node and I'm operating it. Is there something else I need to be doing, or does everything just roll automatically? It's just should check if I'm connected.
Yeah, so it's supposed to be fully automatic, right? So the idea is, and how it operates right now is you get set up, you spend 5 to 10 minutes setting it up. You make sure your binary is there. Barry and I and the rest of our DevOps team is always available to help with any kind of setup, or can even hop on a call and talk you through anything you're concerned about. We also run on all the test nets for these networks. So usually we see validators get set up on testnet, take a look, make sure everything's okay, and then they feel confident going to mainnet. But after that, it's really a product that operates automatically, right? So what you do when you set up, the additional step is you set your payment address where you want your funds to go. So sometimes it will default to your staking address, but if you want to set it to go to a specific wallet, we've seen a lot of validators set it to be their relay wallet, so that the fees will automatically start paying for the relayer. Which is a really cool thing to see, that MEV can actually be subsidizing that. And then you also set your payment percentage, right? So you can decide what percentage of the MEV is automatically paid out to you and what percentage is paid out to the network. So an important thing to note is Skip is free. Skip doesn't take any fees on any of these networks as of now. So 100% is paid out to the validator, and then the validator decides where that revenue accrues, if they want to send it back to the network or if they want to keep it to go to the wallet that they designate. We've seen a little bit of a tricky communication thing where some validators are keeping 100%, but they're really using it to pay for their relayer. But then people look at the dashboard and see, why are you keeping 100%? Like, maybe that's a greedy thing to do, but then they have to explain sort of like that it's for the relayer. So one thing I'd love to work on as Skip for over the next couple of weeks is a way to show that, like, some of these funds, like what these funds are being used for, right? If they are going to something that's funding a public good,
Right.
because we really like that use case. So and then after that, it just every block you receive a bundle, you receive a payout to that address, and that's that.
Okay, so you also mentioned testing, right? So that's of course something that's super important. So when you guys roll out on testnets, do you have like the full sort of an integrated suite where you just like send in transaction bundles and test the whole thing on the testnet?
We do, yes. So we try to have constantly running bundle feeders, basically that submit test bundles. So when you get set up on testnet, very quickly you should receive a bundle and be like, oh wow, that's how it works. And then in your Prometheus metrics, it will show you when that bundle was received and the last block height you've received a bundle. And from there you can inspect the bundle, see what's happening. You say, I see the searcher paid this address this amount, and then half of it got sent to me and half of it got sent to the network, because I have my payment splits at 50-50 or however, whatever percentage you set. And then gain confidence around how the system is fair and works for you.
So do you guys plan to sort of, let's say, mark or classify these bundles into these different, let's say MEV market types, so I can see like what sort of MEV types is being what is being added to the blocks that I'm producing?
Yes. So by default, there's an additional setting on the front end, which we haven't enabled you to toggle it yet, and I'll explain why. And that's front running protection, right? So by default, Skip filters out all front running and sandwiching type bundles. These are very easy to detect, and I'll sort of go into why. So we have, when a searcher submits a bundle, they sign that bundle with a certain private key associated with a public address on that chain. After we receive that bundle, we find the signer of that bundle. We verify using like two-sided encryption that they actually signed it with the address they said they did. And then we compare that address to the signers of the individual transactions. So for example, if they signed the first one but not the second one, that's probably an attempted front run. If they signed the first one and not the second one, and then the third one, that's definitely a sandwich. And then if they didn't sign the first one, but they signed the second one, that's a back run, and so we allow it. If a validator turned off that protection, we would allow for anything, right? So you have, a product that looks almost identical to Flashbots in that situation. I think what we have opted to do, and I think what is probably the best, is to have these things turned off temporarily until governance comes to a decision about what they want to allow.
Right.
Because
so it's default off, but you can enable them if you want later.
Exactly, yeah. And I the reason for that is we don't have front running or sandwiching in Cosmos already, right? Because we have these first come first serve mempools where transactions are ordered in the order that they arrive. You're not able to insert your transaction above someone else. So you don't have the concept of front running. You only have the concept of back running. So Skip's mission was to sort of keep that, unless chains really wanted to disable it and to have like a front running type ecosystem. If that's the case, of course we will, because we are an unopinionated product when it comes to that. But we wanted to keep the status quo as it is right now until basically a community tells us otherwise.
Absolutely, makes sense. It's like, it seems absolutely like a sensible default to me, that makes it easy and clear. Who's wanting to make the switch, and then why. I'll see that in the governance. So, okay, what do you think the outlook is for MEV? Like, let's say in the next months, years. There is especially in the Cosmos ecosystem, right? So there's the interchain scheduler coming online. I'm wondering if you're already thinking about, what protocols are likely to be involved in MEV. If you're thinking about categorizing those, what does the future look like? What are you guys planning?
Yeah, so it can go so many different ways. So many different ways. So I think when you look at Cosmos today, there's one chain that produces the vast majority of MEV, and it's Osmosis, right? Because every swap that happens on Osmosis usually produces some kind of MEV because it unbalances the pools on Osmosis, and so there's an arbitrage opportunity to rebalance them directly afterwards. It also happens to be that Osmosis is one of the deepest, foremost thinkers when it comes to MEV in not only the Cosmos space, but in the crypto space, period. We've had a lot of chats with Sunny about sort of like where MEV will go, not only on Osmosis, but more generally. And the general sense that we have is that toxic forms of MEV are going to go away. We might do it, or someone else might do it, but I think eventually they will be pushed out of the ecosystem. I think the catalysts for this will be things like threshold encryption, right, where you have encrypted mempools so that that information doesn't leak out. That's a concept that you can almost exclusively do on Cosmos chains because you can modify consensus in order to enable that. And once we have ABCI++ and vote extensions, you'll directly have the ability to do something like that. How I imagine this is that kind of model might have pretty good product market fit. So that would be a non-skip thing that would disable toxic forms of MEV. I also think there's been a clear demand to just from the validator perspective of not wanting to enable these things. When we first came into the ecosystem, a lot of validators were very skeptical of us. They didn't trust sort of, that we wanted to do what we said we wanted to do. And they were very distrustful of MEV as a concept because they saw it as a big problem that was happening over in Ethereum and it hadn't come to Cosmos yet. So they didn't want to introduce a problem, right? The way that we worked around that was, we sort of figured out, okay, well, maybe we can classify MEV into these two buckets. One is types of MEV that require a look-ahead view of the mempool to basically take advantage of transactions already in the mempool to order yours in front of them. So that would like classify things like front running and sandwiching. And then also MEV that basically is already happening on Cosmos by like submitting transactions after someone else's, which is totally normal. You're totally allowed to do that, of course, on any exchange, including in traditional finance, but creating a marketplace around that ordering so that you don't have all this like spam and latency involved back running and wasting the block space. And you instead have like a priced auction for that kind of ordering so that the value can accrue back to the validators in the network instead of just accruing to searchers and then also like the very expensive infrastructure that they run. So that was sort of like how we entered the ecosystem, right? We want to be here for many years. And so we try to take a very, very long-term view in terms of how we think things will evolve, how our products can be helpful, and how we make like Cosmos the most welcoming and also the most user-friendly experience possible, right? There's an argument to be made that, like, especially now validators are struggling, right? We know this in a very real way. Token prices are down. These chains are very expensive to validate, especially being a smaller validator. There's just not that much room for things to decrease further. And so we want to support those validators as much as we can. But there's also an argument around if we maximize profit when it comes to MEV extraction, what is that going to lead to for like the user experience and people coming to Cosmos and moving liquidity over, right? Osmosis was pitched as a MEV resistant DEX, the first MEV resistant DEX. And I think that's exciting for traders, right? Because they're sick of getting sandwiched on things like Uniswap. And so if we made Osmosis, an MEV extractive DEX, like what does that mean for the vision of that chain and what it's trying to do in the long term? We try to be thoughtful about these things, right? Not only thinking about things from a profit perspective, but also from a long-term, making sure Cosmos is the #1 ecosystem perspective, which we've always been convinced, and that's why we're here, building on Cosmos instead of a different place.
Yeah, so this absolutely makes sense, and also, you're mentioning product market fit and avoiding toxic forms of MEV, and I think Cosmos is an ecosystem where just this wouldn't fly anyway because you can make more chains, right? I mean, if you don't like MEV and Ethereum, what are you going to do? There's Ethereum, and that's that. Like here, you're always exposed to somebody just coming up with a new app chain and just offering that service that you didn't want to offer. So I absolutely believe that. Cosmos will adapt and will build the stuff that users want just because it's so open.
Right.
But it's great to hear that Skip's part of the solution here, and you guys want to be cognizant of what where the value really is and how to sort of build MEV in an ecosystem positive way.
We're trying our best, but we rely upon the feedback of validators. Right. Validators are our customer. They're the only ones that allow us to survive as a product, right? If we're not building things that validators want to run, then we're not building anything, right? So all of our time and focus and thinking has been how do we support validators, and also how do we support validators in the context of Cosmos, where we want to make sure that, and I think validators have the same opinion, right? They care about their own reputation, right? Like we wanted to build something that validators are proud to run. So we've seen that a lot where, a validator will get set up with Skip, decide to share some portion of their revenue back to stakers, and then they'll tweet about it, right? And stakers are excited by that proposition.
Absolutely.
We want to make this something that, validators are excited to be part of, right? And they see it as a good thing for the ecosystem and not something they have to hide. Yeah.
Well, that's that sounds great. I'm excited to see what the future of MEV will be, and I think that's a great sort of closing comment. So, thanks very much for coming over and spending time with us on the Bare Metal podcast, and hope to see you here again.
Thank you. Yeah, I really appreciate it.